Welcome to the Commercial Real Estate Podcast, powered by First National. I am Adam Pawatic, sitting here at the 30th Annual Vancouver Real Estate Forum. My usual co-host, Aaron, unfortunately could not be here, but we do have Rolly from Informa, who stepped up in the guest co-host role, so thank you so much, Rolly. Our podcast guest today is returning, second appearance, Mark Kenney, President and CEO of CAPREIT. We last caught up with Mark in the 2019 conference. A lot has happened since then, quite obviously, but we'll get into that in the main part of the podcast. But first, Mark, can you, for anybody who's not familiar with you, and I'm sure it's very few, can you share with us, the background about how you got into real estate and how you ended up at the forefront of the apartment industry?
Yeah, so I started my career basically from a place of wanting to be in real estate, but not knowing what that meant. I think we talked last time about wasn't that uncommon for, young people to aspire for a career in real estate. Great fortunes are always made in real estate, so why not look at that? Tech wasn't even invented yet. So I found myself in a property management role, albeit for a condo developer, and Tridel in Toronto. And out of that, they had a conversion project, a rental conversion project that I became involved in. And quickly I learned that, rental was a real business where condo was a service business. So that was, first eye-opener for me. Next eye-opener for me was that it was an opportunity to actually build wealth as a career path versus build career advancements like with promotions and that sort of thing, because it was a business. So it was really fortunate timing for me because there was Ontario rent control was in full effect. There really was no business to harvest because rents were frozen. It wasn't really a very attractive space to go into. And it's the classic, go build your career where nobody else wants to be and you'll be a standout. So that is sort of what happened with me. And, I was an ambitious young guy and prepared to put in the work and put in the time and probably had the right set of base skills, which is really highly involved with people and also with a focus on, as we said, like investment. So I was very fortunate to be at a time where Canadian multifamily was consolidating, had a number of very unique opportunities and very fast promotion opportunities. And I found myself at CAPREIT over 26 years ago, where I was the VP of operations originally, chief operating officer, and today I'm the president and CEO.
And the apartment space has been a great ride for those 25 years.
It's been ever consolidating in an environment of ever decreasing interest rate environment, in an environment where just there wasn't enough being built. So the opportunity to reinvest capital and improve properties was everywhere. And that skill set sounds simple, but it's not easily found off the shelf. And that was the best place to be in, the value add apartment business.
Well, let's actually talk about the strategy, because I know for the last couple of years you've had a value add strategy or shedding, I guess, non-performing assets in favor of newer assets. So what was the goal in terms of where you're trying to strengthen your portfolio, and how's that process been?
Well, the value add business was always very, very exciting because you took something in a great location but highly neglected and made it better. But what we did learn over time was that was great. The day-to-day running of the business isn't easy because, when you get a higher paying tenant, you tend to get a more stable economic tenant. And so it's okay to go through that transition of finding more stably financial residents. But it's highly political, and it's we're doing the good work when you think about it. A lot of companies in Canada that are taking these old assets that absolutely need capital for life safety reasons, and they're prepared to invest that capital, find themselves in a political hotspot because nobody's focused on the life safety investment. Everybody's just focused on affordability, and so it becomes a risk that, as much as the investment is great, there's a big risk to the investment being in a hot seat in terms of political volatility. And it's not good for big company reputation. It's not good for ultimately a long-term plan for business to survive. A lot of businesses do. It's like being in the cigarette business. You can grow, but like over time, not so much. Yeah. So what we found ourselves is be in a way more productive position by saying that we're participating in new Canadian supply by building brand new, not building, but buying brand new apartment buildings in the final stages of construction, really providing gap financing so that we can be the first owner. And that's doing some good for Canada, not being in a political hotspot. Now you're a political kingmaker, and you're in the same business. At the same time, all the residents are at market, so you have less regulatory risk. All of the buildings are in perfect condition, so better capital planning. It's tricky in the value-add business. Every building you buy is at a different stage of its life cycle in terms of investment life cycle. So when you have something brand new, you can do perfect planning as well. So a whole host of reasons why brand new rental construction is more interesting to us than the old value-add business. Now, close to 93% now of our portfolio is value-add. Yeah. So we're hardly out of the business, but we're not acquiring in that space anymore. We've not acquired any.
Full stop.
Full stop.
Okay.
That stopped when I became the CEO. Yeah. And we've only been buying new rental construction, and we've been accelerating the sale of older assets in exchange for buying new.
So I guess taking that a step further, when you're looking at the sale of older assets, does that have anything to do with the embedded carbon in some of these older buildings and the cost associated with
it? From an ESG point of view, we're also doing the good work when we are the buyer of these assets. So this is a complicated one to get. Like if a building is environmentally unfriendly in its carbon emissions because of the current private ownership that's not investing, it's obviously doing no good for the environment. When a company like CAPREIT comes along and does all the investments, we think it's impact investing, okay? However, what tends to be benchmarked is the actual emissions, not the impact that you're making. So even in our ESG grading systems with entities like GRESB and that kind of thing, they haven't quite adapted to the fact that we're making a difference and an impact difference versus holding an asset that's doing some form of environmental harm. So that's a gap in the understanding of what the investment is actually doing, and it's a difficult one, at the end of the day to kind of communicate. Easy for me to say it here, hard to get recognized for it in a grading system.
And there is no great standardization of any of that about managing assets in obviously there's rating agencies, things like that, but I don't think industry-wide there's consensus on what we should be doing goal-wise.
No.
There's nice fancy goals, but not.
Yeah. Well, and the other thing too is, and I'd like to throw this stat around, apartment REITs in Canada are 2.5% of the rental stock. We're an extremely small percentage of the overall ownership structure, but we're the only structure that publicly discloses what we're doing. So then you have, 97.5% or 98% of owners not doing anything and not disclosing it, whereas we are. So how are you benchmarking against people that don't disclose any information whatsoever? It's a hard benchmark to kind of throw out there.
Yeah, until there's a regulatory structure that forces people to, it will skew towards the public-facing groups much more, which is unfortunate. Yeah. Or financial incentives, of course, would be the other one. I will slide in CMHC Select as a particularly good finance option for that, but we won't go too deep into that one. I'm a big fan of your LinkedIn page, and I would recommend anybody.
I'm a social media influencer now.
Yeah. Well, yeah, no. If you are active on LinkedIn, I would suggest going to Mark's page and following. Because he's pretty vocal about a lot of the hot topics of the day when it comes to the apartment world. But in that world, you were very vocal about regulatory risk. And I think you were quoted in maybe the Globe about regulatory risk being the biggest threat to our industry.
Well, it is.
Yeah, no, and I don't disagree. There's
not something investors want to hear, not something I tend to shy away from. The fundamentals of apartment investment in Canada are potentially the best on the planet Earth right now. And we'll talk about supply if you want. And I'll tell you all my thoughts on what's going on with the supply problem in Canada. But at the end of the day, this is not a business fundamental issue. This is the potential for short-term thinking governments to get in and do the wrong thing to further stymie interest in supply. Supply is not residential supply, especially apartment supply, is not just a given. People don't take their capital and say, oh, we're going to do it for the good of the country. It has to be a safe environment. And sadly, in our country, you've had disjointed government thinking that's kind of stepped in and stepped out and stepped in and stepped out and created a really uncertain environment for investors to feel comfortable with. So there's no question there's more money in the planet Earth right now for Canadian multifamily than there is probably anywhere. Money's not the problem.
No, and we are in Vancouver, so it's worth mentioning, of course, that vacancy control that comes up in the media a fair bit. Of course, we look to Ontario. There, they of course move the goalposts on rent control for newer buildings, which has a very meaningful impact on what you can do with an asset. And that's just a stroke of a pen or a bad bit of media exposure leading to a change, and it impacts everything we do. Whereas, of course, the other asset classes, for the most part, don't have any encumbrances on how they structure their cash flows or asset valuations.
And remember, you don't build an apartment with a magic wand. It's a 5-7 year process. So when capital's being organized and the commitment to apartments as an investment is being made, balanced off against other possibilities, when the environment's not clear and changes happen in a quick stroke of a pen, investors just go elsewhere. Everybody wants to invest in Canadian multifamily. Most are afraid to because of uncertainty at the municipal, provincial, and now sometimes the federal level.
And delays in approval on the development side as well.
That's fortunately changing fast, which is great. The whole NIMBYism movement is kind of losing steam now because the gross undersupply of housing has been made clear. But there's still all kinds of examples of self-interested parties only caring about what's in their backyard, not caring about what is going on out there. And this is a challenge. I'm more optimistic on this front because governments, to give credit, are waking up and saying we'd really have an emergency here and have to either incent or force municipalities to do the right thing.
Which, of course, brings us back to affordability being, maybe the biggest topic in our industry, the apartment business.
Had a whole conference on it yesterday.
Yeah. I know that you've been very vocal about that and supportive groups that are working towards it. I mean, it's always, as you said, it's easy to sit here and kind of talk about how we wave our magic wand. But if you're looking to release the pressure valve on that boiler, what would you do to try and address affordability? Either we'll talk about locally here in BC or at a national level.
There is no one solution. This is a complicated issue that requires solutions coming from every possible angle, okay? There's incentives on the build side. Yeah, that's helpful. There is financing programs like you touched on with CMHC. Yes, that's helpful. There's the development process. It's got to be fast. That's also helpful. But there's stable environment in the regulatory front at the provincial level. That's the most helpful. But there are so many things going wrong for us in Canada right now on this front. You've got this rising interest rate environment. It costs more to build. You've got inflationary pressures with supply of materials and labor costs. That's a problem. You've got immigration numbers, which as Canadians, how do you say that in a negative light? Which I don't. What I say is, where's the housing solution to match the immigration policy? So, all of these things are colluding at the worst time. I'll go back just a little bit. And why wasn't anybody listening to me? But during the pandemic, Canada had an incredibly unique circumstance happen because of who we are as a country. And I'll explain that. Let's make it simple. We have 3 cities in Canada: Toronto, Vancouver, Montreal. Okay? And during the pandemic, the under 30s went home with their families or went to their cottages or secondary properties in unprecedented, undocumented numbers. And we knew this. There was actually softness in the rental market. Okay? It wasn't because we were oversupplied. It's that there was no one living there. Where were they living? With their mom and dad. At their cottage. In places that weren't fully used in the past. This didn't mean the supply problem was over. This meant we were having a pandemic. Now, the same thing didn't happen in the U.S. because the under 30s don't go home in the same numbers in the U.S. as they did in Canada, because in Canada, culturally, our under 30s live within an hour of mom and dad. Why? We have 3 cities. It's that simple. Like, people don't think of it. If you're from Toronto, you're a West End Toronto or an East End Toronto person. Your family's always been there and been there for 4 or 5 generations. And you're going to work in the East End of Toronto or the West. It's not even Toronto. It's the East or the West. It's that, or the North or downtown. Like, it's that cultural. And so when you have all these, like I'm a sociologist, but when you have this backdrop of many cultures coming to Canada that are new, they live in their cultural communities. If they live in their cultural communities, the kids aren't going far from that when there's only 3 cities. So I'm repeating the point, but this was when nobody was paying attention to this. And governments went to sleep, and the rental market was slow. We're giving incentives away and having bad results because the market was weak. And all along I kept saying, we have a supply crisis here. It's coming back. If you believe and this is what's happened. And we've layered on immigration now. So on the solution front, there's another cuckoo thing going on in Canada that's getting no attention. And that is, nobody fully understands or connects with the fact that the municipalities actually do control the supply. Not with just zoning, with the capacities of municipal service, okay? All multifamily units in Canada are built on municipal services. They have to be. But think about it. Every time you go to a cottage and you go to the country, there's a house there that's on a septic and it's on a well, okay? But if you want to build 2 units on the same property, it's not allowed. You can't get permitting for it. So in the U.S., so we rely on the municipalities expanding their municipal services to make up for this problem that we're having, and they don't. They're municipalities. It's a government. In the U.S., I'll use Dallas, Texas as an example. They have something there called municipal utility districts, MUDs. And what those are is the private sector building the municipal services and handing them over to the municipalities. At 60% of the cost, it takes municipalities. Hyper fast, highly efficient in cost, and it builds the capacity for more housing. We don't do this in Canada because we rely on the municipalities to solve our problems. So we've got government here, and no one's really saying, well, what's really stopping things? We're stuck on the permits. But it's not the permits, it's the capacities. So the permits get slowed because of capacities, and there's always this friction, but we have to figure out a capacity solution in Canada.
Which is a slow-moving ship to try and steer.
That's why you have to be an evangelist to get people's attention. Yeah. You're not going to just sort of drop the point and people will say, yeah, there's a good idea, let's do that.
Yeah. That capacity issue has been a problem for years. When I worked in residential development, we had the same thing, trying to strike agreements with the municipalities to build that infrastructure.
Build the capacity.
The water and the sewage, exactly like you're saying.
Yeah, it's kind of simple.
That was 20 years ago, too.
It's not changed.
No.
Yeah.
I guess in terms of other headwinds, and this would be more positive news, I saw you commenting on the foreign buyers restrictions being lifted.
Yeah.
Is that just generally from the sense that more investment dollars is better for the apartment community?
Yeah, well, I think we need all the capital we can get. And I sympathize with the problem of foreigners buying a house in suburban Vancouver and not living there. That's a problem, okay? I don't think what's properly appreciated is that half the condos in Toronto and Vancouver were built on the backs of foreigners putting deposits to allow those condo developments to go ahead, which became not just residential supply, but rental supply. Mm-hmm. Most of our rental supply in Canada has come from the condo industry. So taking foreigners even out of that game, not good. We need the capital. Real estate is by definition a capital-intensive business. So, to not have all the capital we can possibly get on the table at a time when we need all the capital that's possible to get out there, it's not understood. It becomes politicized.
Mm-hmm. And just another example of regulatory risk, that all of a sudden you just shift the investment landscape. I mean, that was more of a fine-tuning than anything else, but...
Government acted fast. What we realized was that very quickly industry woke up and said, well, we can't proceed with these developments because we've got more than 3% of foreign participation in the development capital.
And then we can't house the 500,000 people you plan on bringing in next year.
It's the problem when politics gets too mixed to the natural needs of moving development forward.
So maybe as a comparison point, when you talk about your European portfolio, what problems do they not have there that we have here? What pain points does it solve for you?
It's similar.
Is
It's
it?
similar.
Okay.
Yeah, like they're little. I call them smart socialists over there in the Netherlands. Like they have 5 different levels of minimum wage, for example, which makes a lot of sense to me. Their social policies. They have really interesting social policy when it comes to residential. They believe in high rent increases on the poor, which sounds outrageous, but it's actually really clever because what the thinking is if you need an apartment, you can get a subsidized rent apartment, but that rent will stage up dramatically over the next 5 years to make room for someone else. So it's really forcing the homeowner to address the issue of, I got a free ride, I got to do something.
Yeah.
And it sounds mean because there will always be that example of someone that they just can't do that, but it's good policy because it works in general. And I am a big believer in that. Make room for those that need help. Don't put everybody on a permanent life support system of subsidy.
The structure to keep them in it rather than get them out of it.
Yeah, and make room for someone else.
Yeah. Yeah, I mean, but you can see how politically that would be a difficult one.
Not in Canada. Holy smokes. Can you imagine?
Yeah, it's going to be nobody's platform.
Yeah.
In terms of an investment environment, are you getting better yields there? Are you seeing better appreciation, or how does it compare to Canada's? I know that Canada does not compare to other markets in that regards.
It's got its own regulatory political interference. We went there because yield spreads were 250 basis points over the cost of 10-year money. It was made even better by the fact that we could take our equity portion. You get 70% leverage, no problem. That's great. The equity portion, 30%. We were able to do a swap structure for euro. Don't ask me to explain, but basically we were getting paid on the equity, which was remarkable. So our all-in adjusted interest rate carry really was more like 300 basis points of spread, and that's now changed. But that portfolio, again, has very, very unique attribute the Canadian portfolio does not. Every unit is individually condo titled, and nothing stops us from selling units on vacant possession. So there is no regulatory.
Like you could buy a 100-unit building, sell 7, and keep the rest. And that's not
as units turn over, you can sell the unit.
Wow,
That's interesting.
Yeah, that would be, from a finance perspective, that would be difficult in this country, and likely
it would be. It's worth. It's something that we should be thinking about, though, in Canada, from investor liquidity. You'd find a lot of investors a lot more comfortable if they knew they were investing in something that's value wouldn't be destructed with regulation. That there was an escape hatch with individual unit sale. That to me would, I think, really go a long way to drawing more capital into apartment investment. Give investors that relief valve. Don't give them the threat of the next politically elected government that wants to do something from a regulation point of view that's destructive.
Yeah, I mean, like illiquidity, of course, is part of the reason people do get frustrated with real estate. But I guess that's where REITs step in terms of giving liquid access.
Yeah. But none of the REITs are in the business of issuing equity today because we're all, trading well below our NAV, and none of us will issue equity, and we're all kind of stuck right now. So there's liquidity in the marketplace with, trading shares, but there's not, new liquidity being added for people that want to invest in real estate.
Are you buying your own units right now?
Aggressively.
Yeah,
aggressively.
Yeah, it's a freebie.
CAPREIT's had an NCIB active for 26 years, and we've only ever used it in the last 2. And, I will continue to use it as we sell buildings at 3.5 caps. I'll buy back my stock at a 4.5 cap all day long.
Why not? So, Mark, looking ahead at your outlook for the next few years, I mean, what are you going to do on the investment side for the next 5 years?
Well, our CAPREIT 2.0 strategy, from a capital allocation point of view, is pretty clear. We'll be buying assets that are new construction in the final stages of development and putting all available capital into that. We'll continue to sell the less strategic, lower, more affordable part of our portfolio, because that end of the portfolio is actually offering extremely attractive cap rates still, getting good liquidity out of sale of assets, buying new construction, buying back our stock, and deferring our revolver financing. So our revolver is a free-floating financing structure to allow us to grow. It's currently at about 6%. If I can trade apartment buildings at 3.5 and pay down 6% debt, that's a pretty good use of money too.
Absolutely.
And what does the regulatory framework look like in 5 years?
Well, I'm hopeful. Like what is finally come to light is I am finally sensing, I think peers are also sensing, the media is recognizing the supply issue. We have to keep on this narrative of supply. Think about it. Real estate, by definition, is a highly capital-intensive business. Real estate is capital. Locations, use, whatever, but it's capital. We need a lot of capital. I think we did the number of what the country needs for the requirements of supply. It's in the neighborhood of, I think, $3.8 trillion.
On just the equity portion of that?
Yes.
Oh, wow.
So think about 3.8, not rental, but all resi, close to $4 trillion. The entire Canadian debt is sitting at $1 trillion. Is the government going to bail out and get in the business of, building all of that? That's communism.
Yeah.
Okay.
Or can the lenders give $8 trillion in debt to go along with that equity?
So we need international equity. We need capital from everywhere. We need a landscape to invest that capital in. But the use of that money and the appetite for multifamily is not the problem. You've got capital ready all around the world to come to Canada. It's the greatest country in the world, for goodness sakes. We just have to have a clean environment to allow that capital to flow.
Let everybody know we're open for business.
Yeah, exactly.
Yeah. Mark, we are out of time. You've got, I believe, a speaking engagement at the forum coming up in a couple of minutes here, and I would hate to keep you over, especially with Rolly sitting right here, because he would know that we were the ones that caused it. So thanks for sharing your thoughts today, and I look forward to seeing you on the panel. Thanks First National, of course, for sponsoring the podcast, and for Rolly for hosting us here at the 30th Vancouver Real Estate Forum. Most importantly, though, Mark, thank you.
Thanks again for having me, guys.
Thank you.
Okay, bye.